Hello fellow traders. Correction length around key price extremes is critical for managing trades. Stocks often oscillate after reaching 52-week highs or lows due to trader psychology and institutional behavior. Recognizing typical duration of these corrections and early technical signals can help decide whether to buy, hold, or sell. And today we're going to focus on how these stocks behave after reaching the 52-week highs or 52-week lows. Our goal is to understand the correction durations and spot technical clues signaling whether to buy, hold, or sell. And we'll use a real chart from CVS and Charter to drive the points home. Today we're going to go into understanding stock corrections from 52-week highs and lows by Pajama Trader. Let's get into it. Early warning signs of reversal from 52-week highs. The CVS example. Stocks approaching 52-week highs tend to attract profit taking as traders anticipate a pullback. A doji candle near the high, characterized by small real bodies and long wicks, shows indecision and signals of a potential reversal. Declining volume on the upward trend indicates weakening buying interest, showing a loss in momentum. Together, these signals provide an early alert that the correction is likely imminent, prompting traders to adjust stops and consider partial profit taking. In the CVS example, nearing the 52-week high with a candle doji on top is an early reversal warning. And you'll notice when we get to the example how the volume decreases on the way up, which shows buyers getting tired. And this combination of alerts shows traders to prepare for a potential pullback or a trend change. It's a cue to tightening stops or take potential profits. Typical duration of corrections. Corrections from 52-week highs or lows typically last between 1 to 3 months, but can vary. Quick and sharp sell-offs may complete in weeks, especially in volatile markets, whereas slower, drawn-out pullbacks often indicate a fundamental shift. Understanding typical time frame aids traders in differentiating the difference with the different transient volatility and deeper trend changes. Monitoring volume in conjunction. Corrections are normal but vary in length. Average pullbacks last a couple months, but volatile conditions can speed this up. Extended corrections deserve careful watch as they signal a bigger market or stock trend shift rather than just a brief pause. Identifying the bottom and reversal points in Charter. The presence doji candles near lows signal equilibrium between selling and buying pressure, indicating seller exhaustion. Accompanying volume spikes show active dip buying, which can reverse the trend. A confirmation higher close after the doji reduces the risk of a false turnaround. And traders should use this confirmation to enter new long positions confidently rather than prematurely buying lows without a signal support. In Charter's chart, the doji following the decline shows a battle between the sellers and buyers. And we'll notice when we look at the chart that the volume spike is also dip buying. Traders will look for a close above the doji candle range to confirm a reversal and a safe entry point. Making a buy or sell decisions at 52-week extremes. Buying should be attempted after confirmatory signals like a volume-backed doji or hammer candles indicating strong demand near lows. Conversely, signs of waning momentum, such as weakening volume and indecision candles near highs, suggest trimming or exiting positions is prudent. Balancing these signals with fundamentals and overall sector strength enhances decision-making quality. Stressful timing depends on patience for confirmation. A low to weak volume is risky. Prefer entries with reversal signs that come with strong volume support. Similarly, trimming near highs when the volume fades and dojis appear that helps lock in profits before the reversals. The example over how stocks react to 52-week highs and lows. So on CVS, we're at 52-week highs. And during that run up, you have a doji, 1, 2, in the uptrend. Then shortly after, you have sort of like a hammer doji happening here. And as that's going up, you see the volumes getting lower. And then you have this one here where you have higher volume, but it's getting lower. Didn't close the top. So to get over to Charter and what happened when it reached its 52-week highs. You got a doji right up here in the uptrend. You started seeing a decline on volume. Then you had another volume here before the sell-off and gap down. So which one would you buy? Would you buy CVS making new highs on weaker volume? Or would you buy Charter that looks to be showing exhaustion on a sell-off through these dojis, showing that there's a reversal coming? And on the last close, you have volume, which looks like another doji. So a day after, with continued volume, does that look like a buy? Or does CVS look like a buy? Integrated approach for trade management. A disciplined approach requires tracking volume alongside price trends, continuously watching for reversal candlestick formations. Early warnings of trend exhaustion or new buying interest are traders' most reliable signals. A well-timed entry or exit following these technical setups leads to better risk-adjusted trade outcomes. Always confirm signals and avoid reacting on emotion. Always integrate volume analysis with candle patterns, and this combo offers the clearest of clues to me, and for most others, I'm sure. Apply these principles when making corrections off 52-week highs or lows to maximize returns and minimize losses. In summary, corrections from 52-week highs and lows are common, lasting from weeks to a few months. Recognizing candlestick reversal patterns like a doji combined with volume trends provides crucial buy-sell signals. Patience for confirmations avoids costly false entries, making these setups a vital part of a trader's toolkit. We've learned how to read reversal patterns combined with volume around 52-week highs and 52-week low extremes. Always wait for confirmation and manage risk accordingly. If you found this useful, give it a like. Share this with other traders looking to spot reversals. Subscribe for more Market Edge videos just like this one. Thanks again for watching.